Hey, have you ever found yourself glued to your screen, obsessively watching stock prices, buying and selling more often than you planned? It's not just about wanting to make quick cash. Our brains are wired to trick us into this cycle of excessive stock trading, and we don't even realize it. It's like our mind is playing games with us, making us feel like we're in control, when we're actually getting pulled into traps set by our own biases. Imagine you're in a casino, surrounded by the flashing lights and the constant ding of slot machines. You know the house always wins, but there's something about it that keeps you at the table. Now, replace that casino with the stock market. The setup is almost the same. The thrill, the excitement, and the endless possibilities is all designed to keep us playing the game over and over again. And the biggest culprit, our brain's overconfidence bias. Overconfidence is like wearing blinders. It's when we believe deep down that we know exactly what the market's going to do next. We convince ourselves, I've got this, after a couple of wins. But just like in that casino, where you might win a few rounds before losing it all, the market doesn't care how sure you feel. The market is unpredictable, and overconfidence can push us to trade more than we should, believing that every move we make is the right one. Here's a metaphor. Think of overconfidence as driving a car on a slippery road. We feel like we're in control, but one wrong move and we spin out. That's what excessive stock trading is like. One trade too many, and suddenly we're off track. And it's not just overconfidence. There's something called the recency bias that messes with us too. Have you ever had a streak of good trades and thought, wow, I've figured this out, I should keep going? That's recency bias. It's when our brain places too much weight on recent events and assumes that what just happened will continue to happen. Think of it like watching a streak of sunny days and leaving your umbrella at home, only for it to power the next day. Just because the last few trades were successful doesn't mean the next one will be. The recency bias tricks us into thinking we've cracked some code, when really we're just riding a temporary wave. Now, let's talk about the loss aversion bias. This one hits hard. Imagine this. You buy a stock and it starts to drop. Instinctively, you want to sell. But you don't because you hate the idea of locking in that loss. You think, maybe if I wait a little longer, it will go back up. Sound familiar? This is like holding onto a sinking ship, hoping it will float again. Our brains are hardwired to avoid losses more than to chase gains. And that's what keeps us in bad trades longer than we should be. It's why so many of us make emotional decisions, buying high when everyone's optimistic and selling low when fear takes over. But here's the kicker. Confirmation bias sneaks in to reinforce our bad habits. When you're in a trade, have you ever found yourself searching for news or opinions that support your position? That's confirmation bias in action. It's like being in an echo chamber, where you only hear what you want to hear. It's like this. Imagine you're shopping for a new phone, and you really want one particular model. You go online and only click on the reviews that say it's the best choice, ignoring the ones that highlight its flaws. In the stock market, we do the same thing. We look for information that tells us we're making the right move, even when we might be heading for a loss. And that, my friend, leads to more unnecessary trades. Let's pause here for a second. Does this all sound familiar? It's not just you. These common biases are common to all of us, and they're especially dangerous in fast-paced environments like stock trading. The worst part is, they don't operate alone. They gang up on us. You may start with a little overconfidence, thinking you've got the market all figured out. Then, recency bias kicks in, making you believe your latest win streak will never end. When things start to go south, loss aversion keeps you in a bad trade longer than you should be. and confirmation bias convinces you it's still a good idea. Before you know it, you're trading way more than you planned, and your portfolio is suffering. It's like trying to walk through a minefield blindfolded. You think you know the way, but each step you take could set off another trap. But here's the thing, understanding these biases can help us break free from them. Awareness is the first step, right? When we know our brain is wired to trick us, we can start taking steps to avoid the traps. One of the best things we can do is create rules for ourselves. For example, setting a limit on how many trades we make in a day or a week. No matter how confident we feel, think of it like having guardrails on a mountain road. You may still get tempted to swerve, but those rules keep you from going over the edge. Another powerful tool is journaling our trades. Yeah, it might sound boring, but it's incredibly helpful. When we write down why we made each trade, how we felt, and what the outcome was, we can start spotting patterns. We'll see when our overconfidence bite or when recency bias led us to make a bad call. Over time, we'll learn to trust our strategy more than our emotions. It's like building a muscle. At first, it's tough to resist the urge to make just one more trade. But the more we practice, the stronger our discipline. So next time you feel that itch to trade, because you're sure you know what's coming, or because you just had a few wins in a row, or because you can't bear the thought of a loss, pause, ask yourself, is this really me? Or is this just my brain playing tricks on me? And remember, the stock market will be there tomorrow. We don't have to win every round to come out ahead. Sometimes, best trade is no trade at all. That's it, friend. If you ever felt like the stock market was pulling you into a game you didn't want to play, now you know why. It's not just you, it's our brains, our biases, and those subtle tricks they play on us. The key is learning to spot them, so we can take back control. Leave a comment and let me know what you think. See you around at IntelliWorks.